Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Tamara Charm, partner at McKinsey Company, to discuss the latest findings of their Consumer Pulse. Since the beginning of COVID, the B2C Pulse has provided leading analysis and insights on consumer sentiment and behaviors. The latest research reveals that across America, people have simultaneously embraced new behaviors and reverted to old ones, shaking up brand loyalty further and flexing their consumer power when needed. Tamara, it's great to have you with us. Welcome to Trade Talks, and talk to us about the latest findings and what we're learning about consumer habits.
Great. Thanks so much, Jill, for having me. One of the things we've looked at in our latest reports is what's happening with consumers. Are they maintaining the changes they made during COVID, or are things starting to go back? And what we've seen is a lot of the trends we saw over the last 2 years are sticky. They're sticking around. So consumers are spending more, even in the face of inflation, and we can talk more about it. But when you look at nominal spending, spending is still going up across many categories. And the categories they're going up in are particularly categories like consumer electronics, which we've all been buying more as we've gone more online, sporting apparel. As we've changed to more casual clothing, we're buying more casual clothing. And even spending on pet food has gone up as more of us have pets. And that's continuing. We're seeing the shift to online. There was a huge online acceleration, and there's still more online behavior now than before COVID, even as consumers are going back in store. There's been a huge loyalty shakeup. As many of us couldn't find things on the shelf at the beginning of COVID, we tried new brands, we tried new stores even, and those trends are continuing, with consumers really looking to get what they want, when they want, exactly how they want it. And if their trusted brand from before is not providing it, they're willing to try others. And then one other thing, many of us are starting to go back into the world. We've seen more people say that they're regularly going out of home. What's super interesting is people are still investing in their homes, more so than they did pre-COVID, as home has just started to serve a different purpose in our lives.
Yeah, especially as we're working a hybrid role. And the one thing that you stuck out to me was redoing the wardrobe. I go into the city twice a week for work now, and to see how everyone's wardrobe has changed to certainly much more casual. People wear sneakers now. You don't have to wear dress shoes as much, and it's starting to see jeans in the office with sports jackets. So it's really interesting to see how everything had a shift with the wardrobe, because you're essentially out of style if you don't have more of a casual look. How should businesses respond and react to these findings?
Yeah, so one of the things that's been key for businesses in the last 2 years, and I think will be key as we go forward, is consumers are changing. And as you say, some things are totally, I think many of us are not going to let go of our sneakers that soon. But also, as we're going back into the office, there might be certain elements of our wardrobe that come back that are more formal. So keeping a close eye on consumers and what's going on is more important than ever, not only to spot the trends, but also to know what to talk to each particular consumer about. I think the other thing that's going to be really important going forward, given inflation, is talking about value. And how do you talk and communicate the true value that you're providing to consumers? Because we've seen that they're looking for more of that in this environment.
That's a great point. And you mentioned inflation before. What is driving consumer spending in such a highly inflationary period?
So part of it is we just have more money as a whole in the US. We have a strong balance sheet right now. So if you think about the travel plans, many of us canceled summer of 2020, maybe even summer of 2021. We were left with more money after that, especially given the stimulus payments that came on top of that. So we'll see how long it lasts. But for right now, consumers are in a very good position with how much they have in their bank accounts. And what we're seeing is people are spending that money and, again, continuing to spend. There are some categories where money spend is still higher, so the nominal dollars are still higher. But since prices have risen, the actual consumption is starting to go down. But other categories, like the ones we talked about, sporting apparel, pet food, consumer electronics, people are still spending more than they did even last year.
Yeah, and with the stimulus payments and so forth, that was a 2-year anomaly. We're probably not going to see that this year. And the Fed is also raising rates. We know we have supply chain issues. How will that impact consumer spending? For example, would you see them go to more generic brands versus name brands that they've become accustomed to?
Yeah, so we are seeing consumers really focus on value and seeing that private label is increasing right now. And I think that will continue to happen as balance sheets get more stressed. I think there'll be a big question as to whether consumers can maintain a good amount of money in the bank over the next 2 years with all of the macroeconomic forces coming. But if they have the money, they will spend it. And they are increasingly now thinking about what is the best value for my dollar, given that I know times ahead might be tough.
Yeah. And Tamara, to wrap up here, will rising gas prices hurt specific industries such as travel as we head into the summer? I mean, it's the week of May 16th, and we learn that every state is over $4 a gallon for gas now.
Yeah, we are seeing consumers pull back on, again, not overall spending, the nominal spending, but on their consumption. They're buying less because their dollar goes less far in things like gasoline. Even on travel is still below where it was pre-pandemic. And certainly the inflation is taking a good amount of the money versus the increased travel itself.
All right, Tamara, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great to talk to you, Jill. Thanks.